While Democrats are pushing to expand the Fed's mandate to address socioeconomic disparities, our next guest introduced a bill that focuses the Fed solely on fighting inflation. Joining us now, Republican Congressman French Hill of Arkansas. He's a member of the Financial Services Committee. And it's not a perfect world, Congressman. And when you think about the dual mandate, you don't have to think that long to realize they almost seem mutually exclusive. It's almost something that can't be done. And it's asking a lot of the Fed to try to orchestrate full employment and low inflation or dollar stability. And we're seeing the effects of that right now because they're going to try to slow the economy, which would be raising unemployment, to tackle inflation. So they can't do both at the same time. But you see why there is a dual mandate.
I do. Good morning, Joe. It's good to be with you. Yes, you know, I first met Paul Volcker as a young Senate staffer back in 1983 during his Humphrey Hawkins testimony, where he was celebrating the fact that the economy outlook was better than it had been in 1980 and 1981. But he told the committee, he said it's very hard to have more than one mandate and juggle these things. What the Fed needs to focus on is price stability. I believe the 1977 Act adding full employment to the concept of sound money made their job tougher, because if someone doesn't set the priority, then what is the priority? And I think the priority for the central bank should be sound money and therefore price stability.
It almost looks like they get there eventually, you know, kicking and screaming, because we've made that point again and again and again that if you acknowledge you might cause a business slowdown or a recession, and you say, well, we need to do that because inflation is the most important thing we need to deal with. It's the most insidious sort of negative effect that you can have, that you can let happen to an economy. So we're willing to slow down the economy to fight it. So it almost looks like even the current Fed, maybe it didn't all along, but it looks like now in fighting the dollar stability is number one, and full employment is kind of a number two in terms of emphasis.
Well, I'd like to think that's true, but they also waited too long to get started on normalizing monetary policy. And don't forget, Joe, right in the middle of the pandemic in August of 2020, the Fed changed its long-standing policy of almost 4 decades, which is they were going to let inflation run ahead of its target because they felt like there was no risk to inflation running away. And here we are just 2 years later at 40-year highs in inflation due to, in my view, very fast M2 growth at the Fed, very expansive monetary policy combined with the Biden administration's bad fiscal policies since coming into office.